Facebook stock is getting absolutely destroyed today, and it is on pace to have its biggest one-day drop ever. So it is a crazy, crazy day in the market today. Like I said, Facebook stock is getting destroyed. Basically, in this video, we're going to explain why Facebook is getting destroyed. We're going to look at Facebook's fundamental levels. We're also going to look at Facebook on a technical level and what its chart looks like. And then on top of that, we're also going to be covering whether or not Facebook is a buy at this price. So let's get right into it. So looking at the CNBC article, we can see shares of Facebook plunged on Thursday after company forecasted weaker than expected revenue growth in the next quarter. So their earnings weren't bad over this past quarter. They're just expecting things to slow down a little bit. There's a couple reasons for this. The first thing is that Apple's iOS update, you can say, definitely impacted Facebook in a negative way. It definitely hurt how they can target people for ads and things like that. And Facebook expects that to hit their revenue by around $10 billion this year, which it definitely hurts. Don't get me wrong. Another problem that is causing Facebook to have a weaker than expected forecast is just the way inflation has been rampant, and then on top of supply chain disruptions. Basically, what happens is, obviously Facebook makes a ton of money from advertisers and things like that on their platforms, whether it's Facebook advertising, Instagram, or anything like that. They make a lot of money from that. And basically, with the way supply chains have been very bad over the past couple months and even over the past year or two, basically, the companies who are looking to advertise their products, they can't even get enough products to sell. There's a bunch of shortages, so it's if they don't even have enough products to sell, they're not going to spend their money advertising because they don't have any supply anyway. So that's just one little part of the Facebook problem. It just goes to show you how everything's kind of interconnected in the market. You would initially think why are supply chain disruptions affecting Facebook? But really it affects the companies who advertise on Facebook, which then affects Facebook's revenue. So it just goes to show you how everything's interconnected. But anyways, Facebook stock is tanking down basically because of weak guidance. Looking at Facebook's fundamentals though, honestly, it really doesn't get much better than this. Facebook's fundamentals are grade A. Whether you like Facebook or you don't, you can't deny that they make a ton of money, and they make more and more money every single year. We can see back in 2014, they had around $12 billion in revenue. In 2021, they had $118 billion in revenue. And I know 2014 was a while ago, but even if you compared 2021 to 2020, 2020's revenue was $86 billion. 2021, $118 billion. It is crazy at how much Facebook's revenue is growing, even with everything going on in the world. I know 2020 was very beneficial for social media and just technology companies, but 2021 was even a lot better for Facebook than 2020 was. So it's they're just continuing to grow, and they're just a money printing machine. Even if we scroll down a little bit to look at their total assets, total liabilities, and debt, it's constantly growing. Their debt can easily be paid off, no problem. We can see their cash flow is constantly growing. In 2021, they had free cash flow of just under $40 billion. To put that into perspective, they can pay off their debt so easily because their total debt is only $9 billion. So it's they can easily pay off their debt. Their net income for 2021 was $39.3 billion. So it's their debt is no problem at all. Their revenue is constantly growing, even quarter by quarter. We can see right here, right where my cursor is, they're constantly growing their revenue. And we're not going to go through every single metric, but it's they're still growing at a crazy pace. And it's very impressive to see this for as large of a company Facebook is, you can say. And when I say that, basically what I'm saying is it's easy for a company to go to $1 million in revenue to $2 million in revenue. But it's a lot harder for a company to go from $86 billion in revenue to $118 billion in revenue over the course of 1 year. So it's crazy at how they're still growing so quickly. If we go over to their stock chart on TradingView, we can see their price to sales ratio all the way at the bottom right here. It tanked down, which is a really good sign, and obviously this is happening because the stock price fell down. But what I'm trying to say is their price to sales ratio is only 5.8, and they're growing at a crazy pace. So it's like they're trading at a fair valuation right now, in my opinion, especially considering how much they've been growing in the past and how much more growth potential they still have. Obviously, they are huge they intend to be huge in the metaverse to the extent that they changed their company name from Facebook to Meta Platforms. So that's pretty big in that sense. They also own Oculus, which has definitely been growing at a crazy pace over like the past couple of years. Anything to do with like the metaverse or anything virtual reality, Oculus will benefit tremendously. So that's huge. Facebook owns them. So like they're growing. They have more potential to grow and expand in the future, especially with the metaverse, and they're big into AI, and they know what they're doing. They're continuing to grow at a crazy pace, but their stock price is getting absolutely destroyed. So looking at them on a technical level, we can say Facebook's down 25%, right? Clearly they're in a downtrend, and it hurts. Their high was around 384 a couple months ago, and today they traded as low as 237. So they are bouncing off of a pretty major support right at $240 a share. That is a pretty big support right around 240. If we continue to fall, there's also some more support right around 220. And then if we continue to fall even more, which I don't think we'll get this low, but there is some more support right around like 208 to 210. But you never know. The market's crazy. So there's definitely a couple big support levels coming up, and we're bouncing off of a major support level right now. In terms of resistance, we have a pretty big level right around 260, and then another pretty big level right around 290. So those are the main levels to watch, but I think Facebook is at a really good price right now. I like them for the long term. I like them for a buy right now. Does this mean it's the bottom? Absolutely not. Like, the market's crazy right now. Over the past 2 to 3 weeks, it has been a wild ride. I mean, just like last week, Microsoft reported earnings. They tanked down right after their report, and then like a couple hours later, they were skyrocketing back up. So we're in a wild market right now. Netflix stock also got destroyed a couple weeks ago, and they started to come back up. So basically what I'm trying to say is Facebook, in the short term, nobody knows what's going to happen to it. I like it for the long term for the reasons I said. Basically, their fundamentals are grade A. When you combine amazing fundamentals plus a company that is in a growing industry plus a company whose stock price just got cut by 25% in one day, that is one hell of a combination. Now, whether you like Facebook or you don't, they make a ton of money, and they just make more and more money every year, and they're in a growing industry, and they've proven that they are willing to innovate. They're investing heavily in the metaverse, and of course they own Oculus, which is a pretty big company, and it's definitely going to continue to grow over the years. So it's like, I like it at this price point especially. I like it for shares in short put options, not buying put options, short put options as cash secured puts. I'm definitely going to be dollar cost averaging into this one. I'm also going to be shorting some put options on it. So yeah, I like it for shares and short put options. Calls are not the best right now. Like, they can work, but I don't love the setup because of how overpriced Facebook options are right now. And when I say that, like, their implied volatility is 50%, which is pretty high. Just a couple months ago, it was at like 25%. So it's like, you're definitely paying a pretty nice premium for those calls. So like, I just don't think it's a perfect setup for calls. Shares would be ideal. Even though you might not get the 300% returns that you might get with call options, shares would just be a lot safer, and it just puts you in a better position. So with everything being said, let me know what you guys think about Facebook. Are you guys buying the dip, or do you guys think it's going to fall more? Like, no one knows what's going to happen short term. Like, it's a wild market, but either way, I do like Facebook for the long term at this price. If you guys are looking to analyze any company like I analyzed Facebook today, definitely check out that first link in the description down below. You can type in any stock ticker and instantly get access to 10 years worth of data that'll show you exactly why the stock is moving. I just typed in Apple and we can see instantly, we can see all of their most important numbers. This dashboard is cheaper than our competitors. We're adding some crazy updates and the price is definitely going to rise. So definitely check it out. First link in the description down below. Other than that, thank you guys so much for watching.